I'm John Kaiser at the Metals Investor Forum in Vancouver, May 15, 2022. I'm speaking with Mark Kolebaba of Adamera Minerals. Mark, welcome to Vancouver.
Thank you, John. Appreciate it.
The Buckhorn Mine is located in the Torodo Graben, which is geologically similar to the Republic Graben to the east, which has had over 6 million ounces discovered and mined during the past 100 years. But the Buckhorn Mine is the only significant mine to emerge from the Torodo Graben. It's produced 1.3 million ounces before they ran out of ore. Your company has picked up a very large land package surrounding the original Buckhorn Mine. What is it about the Torodo Graben that kept it from delivering these discoveries that became mines in the way that the Republic Graben did? What's the difference in the history of these two areas of Washington?
The biggest difference that I would say is, you got Nob Hill. Nob Hill is the oldest running mine in that district. So it's a 100-year-old mine. It produced just around 4 million ounces, average grade 23 grams per ton. Ooh, that was a pretty big target. So it probably got a lot of the activity. There hasn't been that many exploration waves. The last big wave of exploration was in the 90s, and that was Echo Bay, coming up with the different deposits that we're exploring in the Cook Mountain area. But the exploration just never moved to the Torodo. And that was in the early days. That was Crown that started looking at the Buckhorn, but still that was fairly early days. And there hasn't been that many continuous waves of exploration.
Now, you were able to do a deal with Kenross that gave you access to the entire data set outside the mining lease, which Kenross still owns. And in this, you discovered, there's like 281 drill holes drilled in the periphery of this Buckhorn mine system. And when people like me hear a big number like that, they say, I guess this district has been Swiss cheesed to death, and there's really probably not much to be found. But Kenross put in an application for a plan of operations that included 675 drill pads for 900 new drill holes. So what do you think, now that you've had a chance to review the data, what were they seeing that made them ignore whatever it is those 281 earlier holes represented?
Well, they're the ones who flew the VTEM survey. So once that mine was going into production, they flew the VTEM survey. The VTEM survey really shows Buckhorn nicely because it's a conductor. And there's a lot of other conductors around the property that it's the obvious place to go next. And when you look at the geochemistry laid over top, you really get that impression. So there's a lot to do. And they didn't get the permits. They weren't able to go out and test those targets. So it really puts us in a great position from that point of view. We're also going to start off with the VTEM. We're going to look at we use the geochem. One thing that we did a little differently is prior to getting that Kenross data, we did a ground survey. So a very detailed mag survey, because Buckhorn is also magnetic. And those three data sets, the geochem, the mag, and the VTEM, are really quite incredible, actually. They're really detailed, and you see a lot. There's a lot of things to test.
You also did a LiDAR survey, which helped you come up with the realization that there are hundreds of little pits, little holes sunk by prospectors, old timers, and probably during the turn of the 19th to 20th century. All that past activity did not lead to the Buckhorn 1.0, the crown jewel. Why did the crown jewel remain hidden, and what did a crown do to find it?
There's basically, Buckhorn is two separate deposits. One of them was actually historic, showing that they put a drill hole into it and found the first bit of mineralization. They then tested a nearby another nearby geophysical zone that had soil support, and they drilled that, and it's a blind. It doesn't outcrop. It's a blind deposit, and that's really where the bulk of that ore came from. So really, you need to look at both what was done historically and then also bring in new methods, new technology to help with that process. Those old Mine workings you're talking about, when we did our ground survey, we had guys walking around, walking lines every 50 meters across that property. That was huge. It was a 1,200 meter or kilometer long survey. And they came across 130 pits. And then we modeled those pits on the LiDAR. So we probably came up with another 400 possible pits that we then go out and ground truth. But it's useful because we like to prospect, but we've never been able to find anything that wasn't found historically. The historic guys, I mean, they really hit it hard. So it's really important. But if we're going to do something different, we need geophysical and geochemical methods that look a little deeper. And I don't mean, 1,000 meters deeper. I just mean, it could be 20 meters deeper.
So all those like 281 holes on the property, what was their typical depth range?
Yeah, that's a great. So you've got 281 drill holes, total meterage 50,000 meters. So that gives you an idea. A lot of those holes were in the 100-meter range. So they were looking for something that was open pittable. Those don't forget, gold prices were really low, and they would never have dreamt of doing an underground operation. So they were looking for shallow mineralization that was open pittable. So a lot of those holes would be quite shallow.
Now, one reason that Buckhorn 1.0 was so lucrative for Kenross was that it had inherited the 2,000 ton per day mill in Kettle River when it took over Echo Bay. And it was able to mine Buckhorn 1.0 at 900 tons per day and truck raw ore 80 kilometers to the mill and process it. And this mill is still there. It's mothballed. Kenross gave up on Buckhorn 2.0 when they couldn't get the permit for their monster application. If you find another Buckhorn or even perhaps something better, what reason do you have to believe that Kenross would make the Kettle River mill available to you on reasonable terms so that you don't have to spend $200 million to build a new mill?
Because that mill actually cost, back in 1990, $65 million to build. And then Kenross upgraded it back in about 2008, added flotation cells to it. So there's a fair bit of money put into that. To build a new one would cost you a lot of money, but the worst part would be the permitting that you'd have to go through. I think what would motivate them is the fact that they've got a liability. If they don't have feed for that mill, it is truly a liability. And there's a saying that says, the mill doesn't control the district, it's the mine that controls the district. I mean, if you have feed for that mill, you're going to get access to that or build your own. You don't want to be holding on to an old mill if it has no feed.
Of course.
And those mills, they have an expiry date. If you don't keep them active, you have to re-permit them. And Kenross has done a great job of keeping that active because they're moving some of the water from Buckhorn, and they do keep that tailings active. So there's no issue on re-permitting. So they are thinking ahead, and they're exploring a little bit, but they're not looking for something that's really big at this point in time. And it might, who knows, if we found something that was big enough, it might be of interest to them. They may be the ones that want to acquire something that we discover at Buckhorn 2.0.
Yeah, after all, they only paid $230 million to buy out Crown Resources for something that spun over $1 billion of cash flow.
That's right.
For them. So maybe your destiny is, if you find another Buckhorn, you get cleaned out by a fresh takeover bid by Kenross, which has that mill sitting there.
That's right.
As sunk capex that it doesn't have to spend again.
Yeah.
One other question. You have about 27 million warrants at 10 to 15 cents that expire starting in December of this year and well into the first quarter of next year. That would raise $2.8 million. Given the permitting cycles you have underway with the state, BLM, and U.S. Forest Service for these 3 groups of 8 targets, what's a realistic expectation in terms of how many targets you would get permitted and drilled with assays flowing by, say, the final quarter of this year?
Yeah, I'm expecting to see permits start to roll in, let's say by the end of this month. We should see some. Some of those happen to be fairly high priority targets. Are they the highest priority? pretty high priority. I would say we're going to see maybe 17 to 20 targets that we will be able to round up and get ready for drilling. We also have the Cook Mountain project, which, there's at least 1 or 2 targets where we hit mineralization and they need to be followed up. And we've got a lot of work on them. And we're pretty confident we're going to hit more of that.
Is there a chance Hochschild will approve a budget to drill any of the remaining Cook Mountain targets this year?
I don't have an answer on that yet, but what they basically completed the first 2 years of that option. They had to spend $1 million. They've spent 1.65 so far. So they've got another between $400,000 and $350,000 remaining to meet this year's expenditure. So, if they decide they want to just go through and carry on and test Lamefoot South, for example, that's quite doable in a short period of time.
Maybe the best thing for them is to sit back and watch what you do at Buckhorn 1.0, because that type of asset is right up their alley, what they specialize in. So maybe competition between Kenross and Hochschild for any success you might have at Buckhorn 2.0.
For sure, it's nice to have some competition built into it, because Kenross is still there. They've got a pretty significant budget on their K2 deposit. They're trying to build up the resource there to see if they can feed the mill. And of course, you're right, we do have Hochschild, and they really do need resources. They need reserves because they're running out on their own global sense.
Yeah, I really like this Buckhorn 2.0 story. It's also a flashback for me back to the 80s, 90s when Junior still did traditional exploration in the backyard of Vancouver.
That's right.
Rather than way off on some other continent.
I can drive there in 5.5 hours and spend a few days, see what I need to see, and I can still get back in time to write a news release if I need to.
Excellent. So I've been talking with Mark Kolebaba of Adamera Minerals. Mark, thank you and Adamera Minerals for being part of the Metals Investor Forum.
Thank you, John. Really appreciate it. Thank you very much.